It's understood the banking regulator has asked the Big Four to outline a plan for how they could unwind their businesses if caught in another financial crisis. Analysts say the move was expected as part of a global push for more banking regulations under the Basel III reforms. The chief executive of the Bendigo and Adelaide Bank, Mike Hurst, told a business lunch in Melbourne today the bank hasn't been asked to write a living will, but supports the idea for the major banks. Emily Stewart reports.
Australian banks were able to ride through the global financial crisis relatively unscathed. But the banking watchdog, the Australian Prudential Regulatory Authority, wants a plan if there's another crisis.
What APRA is referring to is something called a living will. It's basically ensuring that if they do end up being a gone concern, i.e. if they do wrap up, that there are steps in place to ensure that the systemic risks involved are not substantial.
A meeting between the Big Four banks and APRA is believed to have occurred last week. However, no official comment has been released. Banking analyst Scott Manning from JP Morgan says financial institutions around the world are taking similar steps.
This is basically an extension of what we've seen in the broader global harmonisation of what we call the Basel III capital requirements. So really it's a global regulatory push that we would expect the banks to be doing.
The chief executive of the mid-sized Bendigo and Adelaide Bank, Mike Hurst, says APRA hasn't asked his company to draw up a living will. He says the community bank model helped the Bendigo Bank survive the GFC by providing them with access to retail funding.
I don't think it's lost on anybody these days that there was only one bank in Australia that didn't use the government guarantee for wholesale funding, and that was us.
But he supports the living will idea for the Big Four banks.
From the point of view of contamination across all of their businesses or being able to access capital easily to support the deposit side of the business, I think it makes some sense.
However, he warns there are some dangers from more regulation.
If they're going to make banking an area where you need more capital, where there's more regulation, where there's more liquidity, then that just pushes the cost of banking up. Now, a lot of that will find its way through to the consumer, and I think it will have a dampening effect on economic growth in most economies.
The two-speed economy is already leading to restrained demand for credit among small and medium-sized enterprises, which account for about 5% of the major banks' portfolios. A report by JP Morgan and Fujitsu found business confidence is also low.
Predominantly as the arrears profile or the write-off profile has not kept pace with the repricing that the banks have been putting through.
The number of write-offs for SMEs are expected to increase over the short term as the outlook remains challenging.